So, you want growth, you want prosperity, you want to end inflation? I got an idea. Make the Trump tax cuts permanent. All right, joining me now to talk about this, Art Laffer, former Reagan economist, Presidential Medal of Freedom recipient, author of the great new book, Taxes Have Consequences, and Steve Moore, Committee to Unleash Prosperity, FreedomWorks, and Govzilla. Steve has your back in 20 seconds. Are you okay? I'm worried about you.
I'm back in action. I know you've had a bad back, too.
I don't want you taking those meds. You know what I mean? I worry about that. All right, thanks, gentlemen. It's good to see both of you. Arthur, you look great. Arthur, I put this up. Nobody's talking taxes, okay? And they're chipping away at the Trump tax cuts. Biden's chipping away at them. The depreciation is running down. They've got to make a move here because we need to rejuvenate those incentives. That'll produce more work, investment, and so forth, right? And by the way, it'll not only rejuvenate the economy, Arthur, it will help bring inflation down. And nobody's talking about this. And I go back to your point about stewards of prosperity.
Yeah, I mean, obviously, Janet Yellen is talking a little bit. She's raising the minimum tax, trying to make it worldwide. That's going exactly the opposite. Biden is clearly not talking about renewing the Trump tax cuts. This is where the Republicans could show some leadership, some being stewards of the economy, see guardians of prosperity, if they would only propose legislation and pass it. Instead of investigating everyone everywhere at all times, pass a bill that would extend the Trump tax cuts ad infinitum to forever, and that would be really, really helpful, and would also give people a clear picture of what Republicans should stand for.
Arthur, tax cuts to grow the economy and a strong dollar to conquer inflation. This is not hard, and that policy mix has succeeded every time it's been tried.
Yeah, we did it in the 80s as well. If you don't remember, Paul Volcker took over as head of the Fed. I think it was 79, Larry. And he started tightening the monetary base after getting used to the Fed position. Then he started doing that with Reagan tax cuts. So you had an expansion of the supply of goods and services. You had a contraction of the quantity of money, the monetary base, the Fed balance sheet, whatever you want to call it. And inflation just dove when Reagan got into office, and it just dove amazingly. And we not only created prosperity, 20 million jobs, but we also brought down inflation dramatically as well. But other than that, it didn't work very much. Just joking.
See, Steve Moore, you obsess too much about debt and deficits.
I knew you were going to say that.
Look, as long as I've known you, 3-4 decades, and I love you to death, you're my brother, you have this relapse thing where all you talk about is debt. You don't talk about growth and prosperity, and you don't talk about the right policy mix, which Arthur practically invented with Robert Mundell. So I'm trying to get you back on track.
Well, let me say this. Thanks for putting me back in, Coach. A couple things. When it comes to the Trump tax cuts, here's my line on this, Larry. Follow the science. We don't need theory here. We have evidence. All right.
Yes.
We have 5 years of evidence. I looked back and looked at what the baseline for revenues was going to be, Arthur, before we did the tax cut, and then the baseline revenues since we've done the tax cut. Guess what? They're higher. In other words, I don't know if I'd say that they paid for themselves, but we don't have a revenue problem today. Arthur and Larry, we got record amounts of revenue. But we do have to do something on the spending side. I do think that the massive explosion of multi-trillions of dollars of spending is having a very negative effect. I mean, Arthur, you said this to me many times. Correct me if I'm wrong. Spending is taxation.
Go ahead, Art. You can respond.
That's true. But by the way, well, I would love to respond that it is taxation, but just for the record, Steve, the tax cuts did pay for themselves. They paid for themselves within 2 years. Now, the repatriation of funds was a very major portion of that, but what you found happening is that taxes grew substantially more in the 2 years following the tax cut than they had in the prior 2 years. It's just way up there, and it's continuing. And now the revenues are coming back under the corporate tax. Now, initially, the corporate tax went way down because we dropped the rate from, 35 to 21, and we had all sorts of other stuff happening, expensing of capital and all that, 100% expensing. But then those numbers just took off, and we're really in great shape now. And now the second thing, government spending is taxation. I mean, you can't give someone something without taking it from someone else. The government doesn't create resources. The government redistributes resources. So when it gives to George, it takes away from Paul. Simple as that. Milton Friedman was great. You could see it really clearly in a two-person world. Imagine only two people in the country, Farmer A and Farmer B. Farmer B gets unemployment benefits. Who do you think pays for him? Am I going way over people's heads?
No.
Farmer A does. It's just accounting. It's accounting. It's just the T accounts. Well, sorry, I don't mean to rant on, but you're right, Steve.
We need another segment on this. Ever since Steve hurt his back, he's lost his whole analysis. It's unbelievable. Steve, I'm going to give you the last word for redemption purposes. Go ahead.
Yeah, I'm going to try to get back on the right track here. Look, the debt is now headed to $50 trillion. I don't know if that worries you, Arthur and Larry, but it does me. I mean, the interest costs on the debt are now going to be, in 5 years, higher than our entire spending on national defense. And no, you got to grow the economy.
Growth
Absolutely.
solves debt. Growth dissolves debt.
My line is, grow the private sector and shrink the government.
All right, that's good. No, that's a good way to end this segment. Well done, Art Laffer and Steve Moore. We appreciate it very much.